This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Help from abroad. Investors cheer aggressive stimulus out of Japan, and that helps send stocks higher.
Lackluster labor, softening data on the jobs front has some concerned about tomorrow's employment report. Are stocks ignoring the numbers?
And heading home, Facebook hopes its new software will be all the rage in the mobile telephone industry. All that and more coming up. Good evening, everyone, and welcome to our public television viewers. Susie, welcome back. Number one. Number two, several cross currents in the market today.
Absolutely. And, you know, Tyler, it was a kind of a wait-and-see kind of day on Wall Street today as investors sorted through mixed economic reports here at home and outside the United States. In the job market, first-time unemployment claims came in higher than expected. They rose by 28,000. That raised concerns that tomorrow's employment report could show that American businesses weren't doing much hiring in March. Meanwhile, investors were encouraged by some news from Japan. Its central bank is launching a program to stimulate the Japanese economy through a bond buying program. Well, stocks rallied in Japan, and then some of that enthusiasm spread to Wall Street, with the major stock averages bouncing back from yesterday's losses. The Dow rose 55 points. The Nasdaq and S&P both added 6 points.
Well, a bumpy run of economic data in recent days, including those jobless claims numbers that Susie just mentioned, has put a more halting rhythm in stocks over the past week, and it has raised the stakes for tomorrow's official employment report from the government. Hampton Pearson has more now from Washington.
The lines at unemployment offices across the country got a little longer last week. Jobless claims increased by 28,000. That's the third straight weekly hike. And the new seasonally adjusted average of 385,000 has not been this high since the end of November. Unemployment claims are often a proxy for future layoffs. A closely watched report from Challenger Gray and Christmas shows employers announced just over 49,000 job cuts last month, down 11% from February, but 30% higher than a year ago.
Certainly it means there's volatility out there, and there are certain sectors of the economy that seem to be taking the hit harder than others.
Earlier this week, there was also disappointing news about private sector job growth. Businesses only added 158,000 jobs last month. According to the closely watched survey from payroll processor ADP, far short of economists' expectations for nearly 200,000 new jobs. Last month, the Labor Department told us payrolls increased by 236,000 and the unemployment rate fell to 7.7%. But this week's soft jobs data has Wall Street traders softening expectations about tomorrow's jobs numbers.
Starting to hear people dial back to 160, 170, somewhere in there.
If tomorrow's jobs numbers from here at the Labor Department come in lower than expected, look for businesses and investors to start to worry about still another soft patch for the economy. For Nightly Business Report, I'm Hampton Pearson in Washington.
Well, what happens with the economy will shape what's next for stocks. Joining us to talk about what we can expect, Bruce Kasman. He's chief economist at J.P. Morgan, and Bob Dahl, chief investment strategist at Nuveen Asset Management. Gentlemen, welcome to you both. Bruce, let me begin with you and asking you about the economy. You say you're a half glass full kind of guy on this topic, but what do you say to the critics who say that the economy is slowing down, there's some bad data coming, and this isn't going to be good for the stock market?
Well, I think we came into the year with a real surprise to the upside. There were some temporary lifts to growth. The consumers proved more resilient in the face of tax increases. The first quarter right now is tracking about 3.5% growth. I don't think 3.5% is where the underlying trend is. I think we've got some slowing. We've got the sequestration drag in. Second quarter is going to be slowing. But I think when we look through it, we're going to feel the economy is growing 2.5% in the face of a fiscal drag. And I think we're going to look at this economy and say this is pretty solid performance.
Bob, it's nice to see. I haven't seen you since you moved over to Nuveen. It's been a while. I want to ask you about treasuries. What are treasuries saying, if anything, about the state of the U.S. economy? Or are their yields coming down based on global tensions?
I think they're coming down, Tyler, because there is some slowing going on, because we have good news for monetary policy out of Japan, and it's breathing a sigh of relief. Look, we've been trading in this 180 to 2% for a 10-year Treasury really since the first of the year, so I don't want to make too much of the fact that rates have dropped a little bit here, but we'll keep our eye on it carefully. A break below 180 and the 10-year Treasury, and we better talk again.
You know, Bob, a lot of people are talking about a correction in the stock market, maybe 5%, maybe more. What do you say to that?
Well, Susie, lots of people waiting for that correction really since the end of last year. And of course, we had a great first quarter, and it seemed like there weren't any down days. Of course, there were. Stock markets always have corrections. Predicting them is impossible. Having said that, I think the stock market's acting a little tired. Really, despite some recent new all-time highs, the stock market today is about where it was a month ago. So it's really marked time and begun to consolidate.
You know, Bruce, I'd like to get your thoughts on where you think the economy will be a year from now or over the next year in terms of the overall growth rate, and whether you think that at that growth rate, corporate profits can continue to grow and support stock prices.
Well, we'd have growth on average about 2.5%. And again, I'd emphasize that's an outcome that does reflect strong underlying performance, absorbing a fiscal drag, still pretty soft global backdrop as well. A private sector that's doing well and maybe picking up steam as time goes on here. I think the other point to make here is corporates are sitting with relatively good leverage. Labor costs aren't growing very rapidly. They don't have much in terms of pressure on any kind of underlying costs. So I think it's a good, solid environment in terms of profit growth. It's a solid environment for growth here with a lot of wiggles, and we're going to probably be wiggling a little bit softer here in the next couple of months. But I don't think there's anything serious. And in fact, I would argue the big event of the last 6 months is we've removed a lot of tail risks from the picture. Events in Europe not being a threat to global financial stability, and the U.S. political scene not really being a threat here anymore as well.
Bob, Bruce was just talking about corporate profits. I wanted to ask you about that. As you look near term, which is more important for investors in the stock market? Is it going to be earnings that come out throughout the next couple of weeks, or is it tomorrow's jobs report? Is the labor market more important?
I think the labor market is really important here, Susie. It gives us some idea of what corporations are thinking about the future. Earnings will be what they were, and they're already history, as we know, and of course forward guidance will be important. I think Bruce hit the nail on the head, however. The reason the stock market has done well is a bunch of them, but the main one is the reduction of tail risk, the absence or the lowered probability of a real problem. That's caused investors to get a little less concerned, maybe a little more confident.
Bruce, speaking of tail risk there, is North Korea the kind of tail risk that you worry about?
Certainly there's a lot of things geopolitically, including North Korea, which can keep me up at night. But those are things I can't control in terms of my understanding. I think Europe is still weak, but it's not a threat to global financial stability. China is not booming, but it's not a threat of weakening substantially. And we've taken out, I think, the threat of a fiscal cliff, of a debt ceiling crisis in the U.S. So the picture is relatively clean from the macroeconomic policy risks that we've been worrying about a lot for the last year.
Okay, interesting discussion. Thank you so much, Bruce and Bob. Bruce Kasman of J.P. Morgan and Bob Dahl of Nuveen Asset Management.
And we just mentioned North Korea. North Korea showing no sign now of backing down in its standoff with South Korea and the United States. Today, North Korea moving a medium-range missile, similar to the one you see here, to its eastern coast, minus the music. The missile does not have the range to reach the United States, but it could hit the U.S. territory of Guam as well as South Korea and even Japan.
Let's turn now to market focus. Investors were buying up at Best Buy today. It was the biggest gainer on the S&P 500 thanks to a vote of confidence from Samsung. The two companies said Samsung will open mini stores in 1,400 Best Buy locations. Best Buy shares surged more than 16%, up $3.48 to $25 and change. Quite a rebound for Best Buy. Shares have more than doubled year to date. A big management change today at Hewlett-Packard as the revolving door continues to turn at the troubled company. Ray Lane this time stepping down as chairman just after 2.5 years in that job. He's been blamed for the botched acquisition of British software maker Autonomy. The news was announced at HP's annual meeting today. Meg Whitman, by the way, continues as CEO. Hewlett-Packard shares were up almost 2% in the regular session, and then they rose a little bit more in after hours. And Dow component Johnson & Johnson turned around after an appeals court ruled in its favor in a patent infringement case. That ruling wipes out a $500 million judgment against one of the company's subsidiaries. J&J shares were drifting down until that news broke, then bounced back, ending the day up about 0.5% to $82 a share.
Well, the Bank of Japan's monetary stimulus announced today gave U.S. investors opportunities in the American shares of some major Japanese banks and automakers. Take a look. Nomura Holdings and Mitsubishi Financial up the most, over 9%. The car makers Honda and Toyota also up in the 4 to 5% range. Goldman Sachs upgrading Panera and raising its price target there to $215 a share, saying Panera is a good growth story. Panera shares up more than 3.5% today to $175.78, a $6 and change gain. Well, a new report today by the Government Accountability Office says efforts to regulate the gathering and sharing of potentially market-moving political intelligence would be very difficult to implement. The study was the result of a 2012 law aimed at clamping down on insider trading by congressional lawmakers and their staffs. Today's report, targeting so-called political intelligence firms, said it was difficult to turn up much about the industry because there's so little disclosure required of it. The report said the SEC believes more disclosure about the firm's activities would help it enforce insider trading rules.
Former Enron CEO Jeffrey Skilling could get out of prison early. He's currently serving a 24-year sentence for his part in the company's collapse. 6 years after Skilling went to jail, the Justice Department said today it's considering a possible deal with Skilling that would shorten his sentence, though it's not clear by how much or even when a judge would make a decision. The government watchdogs are supposed to be in place to make sure corruption is stopped and your taxpayer money is looked after. Sometimes people and companies get away with it. Sometimes they don't. Eamon Javers is our watchdog, and he's keeping an eye out on where there might be fraud lurking. Eamon, I know you've been studying this for a while. What are you finding?
Hi, Susie. Well, if you're an investor, a shareholder, or a taxpayer, there are people out there every day looking to separate you from your money. And now we're going to tell you who they are, bringing you the latest in alleged scams, frauds, and abuse. Think of it as a regular reminder to watch your money. This week, we've got two stories that could have affected you if you've got a mortgage or if you pay federal taxes. Just today, for example, the Consumer Financial Protection Bureau announced 4 enforcement actions to end what it said were improper kickbacks paid by mortgage brokers to mortgage lenders. The proposals would require 4 national insurance companies to pay $15 million in penalties.
So, Eamon, what did they allegedly do wrong there? I mean, tell us how this whole thing unfolded.
Well, the CFPB says the insurance firms provided kickbacks to lenders by purchasing what were essentially worthless reinsurance that was designed to make a profit for those lenders. And that could have inflated the cost that homeowners paid in their mortgages every month. One of the firms, Genworth U.S. Mortgage Insurance, said it will pay $4.5 million. And the firm said it agreed to settle so we can, quote, focus our resources on working with customers. And here's a case where taxpayers were allegedly paying for something they never should have been paying for in the first place. The Department of Justice announced that Floor Hanfeld LLC has agreed to pay $1.1 million to settle allegations that it used federal taxpayer funds to pay for lobbying. The government says that Floor, an energy contractor, misused Department of Energy funds that were supposed to train first responders at a federal nuclear site. But instead of that training, the government says that Floor spent the money to lobby Congress for more federal funding. Floor says it did nothing wrong or unlawful in all of this and that it was prepared to show that its actions were known fully and overseen by Department of Energy officials. Now, we're going to keep watching for these stories, so if you see a good one out there, send it to us at nbr.com. Thanks to you guys. Back to you.
Thanks so much, Eamon. Eamon Javers reporting from Washington.
And coming up next, from stranded cruise liners to see-through yoga pants, the big PR problems that some big-name companies are facing. But first, let's take a look at how the international markets fared today.
Carnival Cruise Lines once again navigating some troubled waters. One person missing after the cruise ship Triumph broke away from its mooring at an Alabama port yesterday, leaving a 20-foot gash in the hull. This is just the latest problem for the Triumph and the troubled cruise line. Mary Thompson reports.
It's been anything but fun for Carnival Cruise Lines these days. A ship adrift in the Gulf, passengers without toilets and running water, its Grand Turk Cruise Center closed for health reasons, and the loss of 32 lives after its Costa Concordia capsized off the coast of Italy last year. For Verizon's former president of communications, Denny Striegel, it spells disaster.
This is no small company. This is a company with about $15 billion market cap. 90,000 employees, 25 billion in sales a year. I'll tell you, this could really hurt this company if and when it catches up with the public that has booked cruises with Carnival.
But passengers keep coming. CEO of Cruise Planners Michelle Fee tells CNBC Carnival's bookings are down just slightly, a fact she attributes more to the company canceling cruises than customers backing out. Amid the mounting mishaps, investors backing out over the last 3 months, though maritime lawyer Jason Margulies points out the industry's self-insurance limits a disaster's impact on the bottom line.
Well, cruise lines generally are insured with protection and indemnification clubs. They have large deductibles on a per cruise basis, but that limits their liability beyond those deductibles.
A bigger cost may be to the firm's reputation. Even as he's built the world's biggest cruise line, CEO Mickey Arison stayed quiet as his ships and company drift.
This is an opportunity for a CEO to get front and center, to give his shareholders, to give his about 90,000 employees at Carnival and his customers some assurance that things are going to be okay.
Arison's public appearances, though, tied to his other business, the NBA's Miami Heat. He's been seen courtside at their games, not dockside, as crippled ships and disgruntled passengers sail in, causing some to question his stewardship. For Nightly Business Report, I'm Mary Thompson.
Looking at Carnival stock, Carnival Cruise Lines closed down 1.5% today. Looking year to date, Carnival has dropped almost 10%. Tyler?
And Carnival, Susie, is, of course, just one well-known company that is weathering some choppy waters. J.C. Penney, much in the news. It's been in the midst of a sweeping and controversial revamp under the new CEO, Ron Johnson. And some investors have been voting with their feet. While the stock was up 4.5% today on an analyst upgrade, J.C. Penney shares are down 23% since the beginning of the year. Meanwhile, the sportswear company Lululemon announced today its chief product officer is stepping down. The move follows a string of recent product complaints and a recall of yoga pants that were found to be too sheer. 3 companies with problems, big and small. So which CEO is handling the troubles properly and which is dropping the ball? Davia Temin is here to join us. She's the president and CEO of Tevin & Company, a crisis management firm. Let's start where Mary Thompson left off, and that is with Carnival Cruise Lines. Has the CEO dropped the ball here by not being as present as some would have him be?
He's dropped it into the ocean. It is he's using some of the lessons he might have known from sports, where you go down, then you come right back up, and you don't necessarily have to acknowledge what's gone wrong. And he's applying them to a totally different industry, and he's not doing himself or his passengers any good.
But bookings took a slight hit. The stock is down a little, but not maybe as much as you would think, given all the things that company has been through. Is the proof in the pudding there, the proof in the numbers?
Yeah, but you know what? You never know when it's going to turn, and it can turn like that. And I think it's at the precipice to turn. So you watch those numbers, and I bet you that they're going to go down.
All right, let's turn then, while Susie gets some water in her throat here, to the question of J.C. Penney. Here is a CEO whose career was in retailing of electronics products. He moves famously and lucratively to J.C. Penney, which is a broad-line department store. His early moves haven't worked. He seems to be trying his best, but it doesn't seem to be working. What should he do?
So the question is, when do you keep on toughing it through, and when do you turn and do something else? He knows Apple customers very well, but they are arguably not J.C. Penney. So how does he start to learn about who J.C. Penney customers are? And has he done it? Has he not done that quickly enough?
I think the question for all of these CEOs is, what is their obligation to their shareholders, their employees, and to their customers? I mean, they're looking for reassurances from their CEO. What do you think?
Yeah. The CEOs seem to be in denial as opposed to stepping up to the plate and coming out with positive statements that the customer comes first, the passenger comes first. We put that before anyone else, and as well as our employees, and I'm not hearing that too much.
Let's talk about Lululemon. They had the famous product issues with the pants that were too sheer. Today, they sacked, apparently, the chief product officer out there. Is that an example of a company that is doing the right things and moving swiftly to hold someone accountable and to make the changes that are called for?
Yes, it is. And they had some problems before about bright
this was
colors.
not the first.
It's not the first. So they toughed it out for the first, but then seeing this, then she moves, Christine Day, and I think she did the right thing.
I want to ask you, going back to Carnival, you know, when you think of companies that have a product problem, in this case, it's these huge ships, do they do a recall?
Well, they surely do a refit. And they surely compensate people a little bit better than they have done. I think they have to show that they're on the passenger side a little bit more than they've been showing it. Because eventually it's going to come back and bite.
Because you're talking about a safety issue here.
Yeah. Yeah, you're talking about safety, and you're talking about physical health if it's the gastroenteritis from norovirus.
You know, what's an interesting thing? Compare the response there at Carnival to what's happened, and it was government involvement here with Boeing and the Dreamliner. Should Carnival just shut down for a week and say, we're bringing all our ships into port, and we're going to check them out and make sure they're safe?
Yeah, because your safety, dear passenger, is more important to us than our bottom line.
So maybe that's the way they should have gone. So you're critical of Arison. He wasn't out there enough. He was paying too much attention to LeBron, maybe.
Yeah.
You give A grade to Lululemon and maybe sort of an incomplete to JCPenney?
JCPenney's yet to be seen. They've got the opportunity to turn it around, but we'll see how quickly they move.
All right.
Okay.
David, nice to see you again.
Nice to see
David
you.
Temmett.
Very good conversation. Coming up next, a new Facebook experience coming to your phone. We'll have the details of Mark Zuckerberg's big announcement. But first, a look at how commodities, treasuries, and currencies did today.
Facebook is hoping there's no place like home. CEO Mark Zuckerberg unveiling a new app for Android smartphones, sort of called Home. Julia Borston joins us from Facebook headquarters out in California with what it all means. Julia.
Tyler, Facebook Home is more than an ordinary app. It gives users the option of replacing their phone's home screen with Facebook updates and photos. CEO Mark Zuckerberg saying he wants to reorient phones so they're about people, not apps.
We don't want to build some kind of phone or operating system that only some people are going to be able to use. We want to build the best experience for every person on every phone.
Facebook's Home app, which will be available for download on certain HTC and Samsung phones on April 12th, features a new tool called Chat Heads, which allows you to chat with friends via SMS or text when you're on other apps, so you can continue conversations across Instagram or even Fandango. A new HTC handset going on sale for $99 on April 12th, called HTC First, is tailored to work with Facebook Home. It'll be sold exclusively by AT&T. To make sure that this and other Android phones running Facebook software runs smoothly, Facebook is partnering with Qualcomm.
What's really important with this kind of an app is that the battery life not be impacted and that you have all the stuff scroll really smoothly, and it's all multimedia, so it's important for that to be rendered really well. So we do all of that interior plumbing to make that stuff work really, really well.
CEO Mark Zuckerberg hopes that by making its tools accessible on mobile devices, no matter what else users are doing, will drive more Facebook usage and then ultimately drive more Facebook revenue.
So Julia, do you think that people like Facebook enough that they would get a phone that's built around it? I mean, how popular will this be with consumers? What were you hearing today?
You know, I think that the response was pretty positive. I think that Chat Heads looks really cool. And I think the key thing here is that you're not buying a Facebook handset. You're not buying a phone that's made by Facebook. You're buying a Google Android device. And these are such popular devices that it's going to give people who already own phones the option of using this. And then if you're a heavy Facebook user, and there are 680 million people who do use Facebook on their phones every single month, if you're one of those people, then maybe you'll think, hey, I would like to have the option of using Facebook more. Maybe I'll buy a phone that's optimized to really run the system and run the software.
Julia Borston in Menlo Park for us tonight. Thank you very much, Julia.
Now, many of you have let us know over the past few weeks how much you missed the NBR.com website. Well, we were listening to you. We're happy to tell you that the new site is up and running. You'll be able to watch video and hear podcasts of every show, read transcripts, as well as blog posts from Tyler and from me, and lots more. So check it out at NBR.com.
All righty, that'll do it for tonight's edition of Nightly Business Report. We hope you will check out NBR.com. It's up and running. We're adding to it moment by moment.
Have a great evening, everyone, and we'll see you tomorrow. And be sure to check out our website. There's a lot of interesting stuff on there.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with the Nightly Business Report News Brief. Investors sorted through mixed economic reports today. First-time unemployment claims rose by 28,000 ahead of tomorrow's employment report that could show that U.S. businesses weren't doing much hiring in March. Meanwhile, investors were encouraged by Japan's program to stimulate its economy. And some of that optimism spread to Wall Street, with the major stock averages bouncing back from yesterday's losses. On Wall Street, the Dow rose 55 points. The Nasdaq and the S&P both added 6 points. HewlettPackard's chairman Ray Lane stepped down as chairman. Meg Whitman continues as CEO. And Facebook unveiled a new app for Android phones to compete for mobile users. Be sure to tune in to Nightly Business Report right here on your public television station.